This is Commodity Wrap. I'm Tony St. James. We wrap things up on a Wednesday. Our special guest today is Brian Hoops. Brian's with Midwest Market Solutions online, midwestmarketsolutions.com. I think I got the email or the web address right there. Brian, thanks for joining us.
I think you got it 100% correct there, Tony. Yep, midwestmarketsolutions.com.
Well, we'll have more on that in a moment. How about we kind of clean up the trade from a WASDE report? World Ag Supply Demand Estimate report came out on Tuesday, 12 p.m. Eastern, and, well, we saw market reaction. I had a feeling it would either be really boring or really exciting, and it turned out to be pretty exciting. We saw limit moves in the wheat market, Chicago and Kansas City. We gave back some of the gains, but just a little bit of those on Wednesday, lower across the board for the wheat complex. What happened?
Yeah, it was more of a profit-taking type day, I think, as anything in the wheat futures, where we gapped higher last night. It rallied to post some fresh highs, but then closed on the session lows. And we may see some sort of a correction in here. This rally just didn't happen overnight. It's been going on for quite some time. Back in late February, early March is kind of we really started to push higher and heard some issues about the crop, and we talked about that. Some frost concerns, maybe some abandonment of acres, and I don't think anyone expected we'd have 3.5 million acres abandoned, but that's what the USDA is telling us. And so, yeah, this rally is not it hasn't ended at this point in time. Maybe we add a few bushels in some areas yet that could receive some rains and still haven't reached that head stage, but for the most part, about 2/3 of the crop is either abandoned or headed out, and a lot of that crop is not going to get a lot better. So we may see a little correction in here, but we'll likely see another round of buying interest come into the market in the wheat. And the main job of this market is to right now ration the supplies. We have big supplies already, but just ration enough so that we don't run out and that we do use up some of the supplies of wheat. So that market probably has been moving the most over the last couple of days, whereas corn, soybeans haven't done a lot of activity. I think there is a lot of corn producers that are sitting in the middle of the country. Of course, Iowa, Illinois maybe don't grow wheat, they just grow corn and soybeans, that are looking at opportunities here, $5 corn, $12 soybeans, and thinking, I'm planting this crop, it's off to a good start, a lot of emergence, some warmer temperatures on the way, rain in the forecast through the 28th or so of the month of May, pretty much an ideal start to the growing season. I may have excess bushels, and I think we're seeing quite a bit of hedging starting to take place as producers are finding $5 December futures, $12 November bean futures very attractive.
Okay. We, up until this point, have been trading, well, on the wheat side, we've been trading the weather, I think. But there are other fundamentals in the markets, especially on the corn and bean side. Now, we didn't have any flash sales reported on Wednesday, but we've had good, strong export sales in the corn space. We've got beans with good demand on the crush, and then you throw in a meeting between the leaders of the U.S. and China, and we know ag will be discussed. How does all of this factor in?
Yeah, it's a lot of moving pieces. Not, like you said, not so much for the wheat. It's pretty much focused on the supply, and there's a real issue with the supply, and we've talked about that. There's a lot of things at play here in corn, and soybeans, getting the crop planted, getting the crop emerged, rain on top of this after it's been planted, and then you also have President Trump going into China. We haven't really heard any announcements of anything that's happened so far. That will be tonight as they are just meeting here, there, and it's in the middle of the night. So maybe by tonight, our time, we'll start to see some announcements or things that are happening. But going into this meeting, it's very optimistic that we would see some sort of trade announcement of China buying more U.S. ag products. And there's certainly been talk about that on the table here, that it's not just going to include soybeans this time around. It could be sorghum, corn, it could be DDGs, as well as soybeans. And China has not been a consistent buyer of U.S. corn in recent years. So anything that would tie China to buying U.S. corn, or a commitment to buy U.S. corn, DDGs, I think would be seen as bullish. So while right now the farmer is thinking about weather and planting the crop, there's also some demand considerations at play. And so we've seen President Trump increase the Chinese demand from 12 to 25 million metric tons of soybeans. Maybe he can pull a kind of a rabbit out of his hat and get China to buy some U.S. corn and corn byproducts as well.
We were higher pretty much across the board with all of the row crops. The exceptions here, again, the wheat market. That's soft red, hard red, spring wheat, all lower. Bean oil lower on the session. Canola market moving lower. And I want to throw canola in here because as we wrap this segment up, how about worst to best? And this is looking over the last 12 months. So 12 months ago compared to where we are today, are we higher? Are we lower? Only one market in this ag space has been lower when we came into trade on Wednesday. Oats, down 3%. They closed higher. That's 4 straight sessions in a row. Rice, even with where we were 12 months ago, now 4 sessions higher. Then you've got canola, up 7%. We mentioned it was lower. After that, this is where it gets interesting. Corn has gained 10% year over year. Beans, up 16. Wheat, up 33. And the leader was actually the worst performer 12 months ago, cotton. It was higher. It's up 35%. This is Commodity Wrap. This is Commodity Wrap. I'm Tony St. James. Our guest today, it's Brian Hoops, Midwest Market Solutions, online, MidwestMarketSolutions.com. All right, Brian, let's jump into the livestock markets. We finally turn things around, get a positive close out of the cattle market, talking live and feeders, both higher on the session. Interesting, though, feeders were not the leaders, were they?
No, not today. It was the live cattle, and it wasn't in June. It was the August contract that really pushed us higher. We anticipate we've concluded the Goldman roll. That was supposed to end today, where traders move out of the long June positions and by August. And it seems like that was a main feature for the trade today. It's supposed to happen in hogs as well, and I think we saw a little bit of that during the session. But certainly the futures are heavily discounted to this week's cash markets, starting with the June contract came into the morning session, $12 discount, and we narrowed that spread a long ways today, and I think we still have more to go. Indication the packers are very short bought and really need to get some inventory. The fact that they're buying cattle on a Monday and a Tuesday suggests that they remain short bought, need more ammunition here. And we did see a little bit of 263 trade in Nebraska today, so adding more fuel to the fire here with stronger cash trade. They're at some point they're likely to cut their kills, but I think they do need to get some cooler inventory. The cold storage reports have showed drawdowns of stocks. Big key time frame is right in front of us as far as grilling season goes. We've had the Mother's Day holiday, but coming up here quickly is Memorial Day, then Father's Day, 4th of July. All of those are big outdoor grilling holidays, and those could be what the packers trying to stock up for right now and replace some of those lost inventory, and that's why they're willing to pay higher cash money even though these packer margins are deeply in the red.
Okay, higher trade for the hogs as well, and by the way, hogs still trading about even with where we were 12 months ago. But if you were looking at returns on investment, we mentioned this earlier on the row crops, where you're talking about corn being up 10% over the past 12 months, 16% higher for beans, wheat up 33%. By the way, fat cattle up 17%, feeders up 18%. But how about these three markets? 18% higher, 37% higher, 26% higher. It's in the equity space where the Dow, NASDAQ, and S&P, kind of a mixed day of trade on Wednesday, but still strength, especially in the NASDAQ, S&P. What are your final thoughts here in the equities?
You know, maybe a little surprising that the S&P futures have been this strong the last 2 days, because we've seen very hot inflationary type numbers on the CPI, PPI numbers over the last 2 days, telling us that inflation was creeping up in both those reports. And so that's a concern. We saw the stock market trade lower after those reports. Both were released in the mornings, but by mid-morning, midday, prices stabilized and then began to rally, and we ended up closing higher yesterday, closing higher again today, making some new all-time highs. Market doesn't seem to be caring whatsoever about higher gas prices, about the war with Iran, about higher inflation, maybe raising interest rates, as some have alluded to now with these numbers that we saw this week. We could see interest rate hikes instead of interest rate cuts, and yet the stock market doesn't show any signs of being concerned about it, and has just some ripping rallies here over the last 24 to 48 hours.
Okay, Brian, we wrap things up. Little information about you and how we find you online.
Yeah, you can find us online. Our website address, again, is MidwestMarketSolutions.com. We recently revamped that website, so check that out. You can also follow us on X. I always call it Twitter, but it's X now, at Midwest Markets and at Brian Hoops. And if you want to talk markets, you can find a list of our offices around the Midwest. Find someone in your area. My number directly is 417-501-5132.
Brian Hoops, Midwest Market Solutions. This is Commodity Wrap.